Hey guys, welcome back to the channel. So I have not posted a video in a while. This is because I've recently moved from Canada to Switzerland. I had a job opportunity in Zurich in private banking, but I still, now that I'm a bit settled here, I want to start posting hopefully once a week to give some market updates. Really what I'm seeing, because I'm dealing with clients and giving them investment decisions every day pretty much. And obviously through this volatile time, I feel like I can give some context to what is going on and some market updates. And I'm also studying for the CFA at the moment, so I am very busy, but I will try my best to do a video once a week. And what I'm going to be talking about is what I'm seeing in the markets, what I'm doing in the markets, and maybe a few headlines from that week, and kind of concluding with what I see in the week ahead with the markets. I would also appreciate if you can please like and subscribe to support the channel, and let's get into the video. Okay, so what I am seeing in the markets is obviously what everyone, including myself, is feeling in the markets, and that is pain. And this is obviously due to different variables, whether it's interest rates rising because of inflation and because of now the COVID shutdowns in China and the war in Ukraine. And all of this leads to more pressure on the markets. But given where the markets overshot after the COVID drawdown, it makes sense that because the market is rational in the long term, it can't go up forever. And companies that are non-profitable and don't really have a future can't just continue going up. But then the market also in the short term becomes irrational. So a lot of times it goes down too much. And takes everything down with it. So even though many companies deserve to go down, it will take the whole market with it. As well, the market is a leading indicator. So because of all these different variables that are happening, the market really only started to go down substantially because of the big tech going down now, but it really has been going down over the past year. And this is because it's been pricing in all of these interest rate hikes and pricing in these different supply chain issues, etc. It's a leading indicator, which means if you think you're going to someday wake up and the world's going to go back to normal and that's when the market is going to start going higher again, that's usually not the case. It's a leading indicator, so it will start going up before everything settles. And that is why, in my opinion, and this is not financial advice, but this is what I'm doing, every week that the market draws down, I continuously buy because I cannot predict when the bottom will come, but usually the bottom happens before everything gets back to normal. And that's why it's extremely hard to predict. And what am I doing in the market? Again, this is not financial advice. Right now, I'm very concentrated. I do not recommend this to anyone. It is smart to have a diversified portfolio. Even in funds, the NASDAQ is down 23%, which means if it hits an all-time high again, which I would believe that it will in the future based on history, that's already a nice gain. But what I am doing, I do research. I am right now in the wealth creation phase, so I'm not diversified. I am continuously buying Tesla as it comes down. My next biggest position is Bitcoin, which I have also been buying a bit. I am actually shocked that Bitcoin has been holding up so well with its higher beta. I would have assumed, especially on Friday when the market was down, the NASDAQ down over 4%, Bitcoin was actually down less than that. So I was pretty shocked about that. I would think that it would be down 8, 10 more percent. I haven't been buying more Ethereum, but I still have Ethereum. I haven't been buying more Palantir. I had Palantir now like full position at these levels for a while. If it comes down after earnings, I might buy more. I did buy a little more Google, and that is really all my position. Tesla's 80-something% of the portfolio, and I will continue buying because they are executing. Their last quarter was incredible. And again, like I said, the markets are irrational in the short term. They will cause drawdowns because everything will just come down with it, but you have to find the ones that are undeservingly coming down. For example, if you bought Amazon, even at the top of the dot-com bubble, you're still up tens of thousands of percentage points, which means it wasn't really fair for Amazon to come down 70-80% like it did, but it did come down with the rest of the markets. Now, I want to go on to some headlines. First headline is obviously Twitter, and Twitter is hopefully being bought out by Elon Musk. I believe that Elon Musk is not doing this for financial reasons. Elon has over $250 billion, and first of all, he's paying a pretty high price for Twitter, and it is very unlikely that he is buying it because he knows he can make it a better platform just so he can then sell it for a higher price. I think Elon is a person who people really misunderstand. He really cares about humanity, and he knows that what's the point of creating Tesla and SpaceX and Neuralink and all these companies if we don't keep the liberal democracies that really provides great opportunities, obviously not perfect, but given the number 2 country, let's say China. We don't want to live under that type of regime, I would think. And he sees that freedom of speech as a very important thing. I think he sees it as something that he wants to contribute again to society. And for that, he bought it. And hopefully it will all go through. And he will make Twitter a better platform, like you said, making the algorithms open source. People can see what's happening, who's banned and why, and also fixing the issue of all the bots. So I really believe in Elon. Obviously, as a Tesla investor, it does hurt a bit, but it's not even about that, because either way, Tesla's going to just trade by the fundamentals long term. I'm not trading in the short term. It's an investment for 10, 20 years. So that doesn't really matter. But also because, again, I want society to be healthy. And I believe Elon also wants this, and that's what he is going for. Also, earnings this week, we saw Google. They missed by a bit, but this was due to their investments obviously losing value. So I would say that they're pretty much on point. Obviously, the market wants substantial beats in order to go up. And even if you just beat, you'll still go down. So if you miss by a little, it's not shocking that it got hit. This is the compression of multiples. I bought a little more because in the long term, YouTube, Google, and all their other bets that we don't even really hear about, I think will provide immense value, which will reflect in the market cap. If we look at Facebook, they went up, and this was because of their daily active users were higher than expected. But again, Facebook, I would say if you're looking at it, the most important thing for you to believe in is the metaverse, which for me, I'm not an investor. I am still curious. I look at it a lot because I don't know yet about the metaverse. Will virtual reality actually take over and be such a big industry that will make Facebook gain another $500 billion market cap? I still don't know. But if you're an investor in Facebook, I would believe that this is what you think. And then if we look at Amazon at the end of the day, AWS is their profit machine. However, for their e-commerce business, they posted weak guidance, and that's a very low margin business. However, looking forward, I wouldn't bet against Amazon because they are building out the infrastructure to really then maybe turn on the profit machine, which will then, again, the stock price will reflect that. If we look at Apple also, they killed it in this past earnings, but they did have weaker than expected guidance, and I assume that is why the stock price fell. But again, the market is just hitting everything because of the compression of multiples. Now, if we look ahead, earnings is going to continue. We still have many companies that are going to report, but I would just say in the short term, I cannot predict what the market is doing. The market is still dealing with all these different headlines and variables and emotions of individuals in the short term, but I would recommend, and again, not investment advice, but those who did in the past that bought in these periods have done extremely well. Obviously, you can't just buy anything, and you shouldn't just think, okay, something came down and it must go up again. That's not the case. You want to be very specific in what you buy. For example, if you look at Intel, we all know Intel, it hit a price in 2000 that it has never hit again. So it was a company that overshot and it never went back up to that price, even though it's Intel. So you can't just buy because you think it's going to get back there. You want to buy good companies that you believe the fundamentals will actually then be reflected in the stock price, and now it's undervalued because of that, and you will do very well in the long term. And if you just want to buy index funds in order to be safer, that is also definitely a good strategy. And I hope to see you guys back here next week, where I will discuss what happens in the week ahead. Thank you very much for watching the video. Please like and subscribe, and have a great week.